Our next guest, that is Dale Smothers, President and CEO of RDS Well. Thank you so much for your time, Dale. Happy Friday, happy Halloween, whatever you like to celebrate. With everything in mind that I just mentioned, you actually say the real story is the spending on AI. But how come the market hasn't been so convinced of that this week?
Yeah, you know, AI spend out is exactly what we should be focusing on, especially going into 2026. It may be the real story of Halloween. It could get a little spooky if people start asking the right questions. However, I think for the rest of the year, Sam, we're going to see this continue to climb higher on the backs of AI. Artificial intelligence spend out, all of the data centers that are being built to meet the demand that we continue to hear about. If the demand continues to hold up, there's high demand, there will be spending to try to hit that demand. Here's the question we've got to ask: at what point and how do we turn all of this artificial intelligence into profitability? And if we start asking those questions, things start to look maybe just a little bit overvalued because that story is still yet to be told.
And Dale, you know, we've talked before, and you're generally positive on the market heading into the year end. I guess, do you still have confidence that this rally has legs? And also, what could derail it outside of people potentially asking that question you just mentioned?
You're exactly right, Marley. We're very optimistic. At this point, I'd say we're cautiously optimistic. Maybe it's Halloween spirit. We're thinking things around the corner could be a ghost. But here's what I know. November and December historically is a good month or two for us to be invested. The Santa Claus rally is real, and some of the names that we're going to discuss here in a few minutes are going to profit from this Santa Claus rally and the spending that takes place in the holidays. However, one of the questions that are going to be asked for us, Marley, is what is the Fed going to do in December? That could truly be the real trick-or-treat season for us. I know that's going to happen in December. We're celebrating something all entirely different at that point. But if the Fed decides that they don't want to cut rates based off of data, things will get a little shaky, a little bit rocky, as well as the China trade deal. Is it really here to stay? That is also something we've got to keep an eye on. The Fed's decision is going to be a balancing act. They're walking a tightrope at this point. They've got inflation on one side, they've got the unemployment rate on the other, and if they miss one way or the other, things could go very quickly in the wrong direction. And for that reason, every single move will be the anxiety around what are they going to do this particular rate cut.
With all that in mind, it very much feels like right now that the markets have been driven by three things. I mean, the earnings, which seem to be holding up for now, at least, although we are seeing some softness in the consumer. But also as well, you know, you mentioned the Fed, so we got that rate cut this week, but there are still big question marks over December. And then obviously that trade truce as well with China. It really feels like markets have been sort of drinking from a fire hose this week. And I saw Jay Woods said it was like cats looking at a wall full of laser pointers. What is going to be the major catalyst moving into 2026?
You are dead on. And, you know, drinking from a fire hydrant, you could open your mouth and get filled as much as you desire. You could pick a stock pretty much right now, and it's been higher in 2025, at least in the AI sector. The AI sector and the technology sector will specifically determine what January and February is going to look like for us, because I think at the turn of the year, we're going to start hearing more and more people. Some have already started asking it, but more and more people are going to wonder, how do we turn this into profitability? You know, 2025 is behind us now. We're going into January of 2026. What does this actually look like? And my hope is, Sam, that we start to see a broadening out in the market, that it's not all led by technology going into 2026. Without that broadening out, you know, this rally could be starting to see inning number 9 or inning number 10 in extra innings, perhaps even, if we use the baseball analogy. Now, here's my biggest prediction. I think we end the year at 7,000 in the S&P 500. I think January sets the tone for what 2026 is going to look like. And again, as long as we see a little bit of broadening out, we've got a Fed chair that will likely be fairly dovish on the market. Probably going to see some rate cuts coming in 2026, and that will be good news. It'll be tailwinds for us, but we've got to see a broadening out here, or we could see overvaluation. So my story to investors is to begin to do your rebalancing in 2026, if not sooner. Begin to get a little bit more diversified and protect against some of these potential extreme pullbacks like we've seen in Meta with one bit of bad news.
One bit of Bad news, too, and you are right. A major pullback there. So if we're going to 7,000 on the S&P and it's time to take a look at rebalancing here, all the while we're all drinking from the fire hydrant, who are your picks that you're looking at?
Yeah, I love all the analogies, and you know, this is going to sound like I'm saying, wait, buy more AI? What are you talking about? I think to the end of the year, Marley, we need to be AI focused. I think Apple continues to run up. We've been ringing the Apple bell for quite some time. Apple still has a lot of room to run. It's not got complete clarity yet on its language model and how it's going to adopt that. A partnership with OpenAI has made that a little bit more clear, but this super cycle with iPhone 17 is something we need to be watching. Amazon, another one. We have been talking about Amazon. As a matter of fact, just a few weeks ago, you and I were talking about Amazon being a laggard. You can't call it that anymore, and I think we've got a lot of upward trajectory there with AWS adoption. This story is going to be pretty incredible as we start to see Amazon pull out, especially ending the year with everyone wanting that big, beautiful box on their front porch with the smiley face, right? Everybody knows Amazon is that, but AWS is the story. Prime subscriptions, they're the story. And my last one in the AI sector is CoreWeave. I think you need to pay attention to CoreWeave. If AI spending continues, buy the dips in CoreWeave. And when we talk about diversification, I'll give you a name, Royal Caribbean. Let's consider Royal Caribbean. By putting that into a growth portfolio or an income portfolio, you're going to be benefited. Buying this dip, we have as much, in my opinion, as a 20 to 25% upside in the short term, because their miss on revenue, Marley, is what kind of caused a lot of this uncertainty. They beat on earnings, and revenue kind of takes care of itself if we see interest rates start to come down. Costs a lot of money to finance those big ships. If it costs less, the bottom line looks better.
Well, Dale, we appreciate you being with us on this Friday. Happy Halloween to you. That's Dale Smothers from RDS Wealth.